Welcome to PwC IFRS Talks, your source of all things IFRS, technical accounting matters, business issues, current standard setting, and regulatory updates. I'm your host, Ruth Preedy. In today's episode, we're going to talk about the accounting for cloud computing, and I'm joined by Gary Berkowitz. Welcome back.
Hi Ruth, it's great to be back, thank you.
You did crypto and now you're doing cloud. It's all digital and exciting, Gary.
Yeah,
you're going to get the brand Digital Gary.
Yeah, I'm trying to roll with the cool kids. I've got some young children. Need to say what I need to say to keep them thinking that their dad's pretty cool.
Exactly. You're an accountant. What could be more cool? So let's start at the top. What is cloud computing?
Right. Okay. Let me see how badly I can do this. So it's when you take your computers and you put them up in the sky. So yeah. No, that is not cloud computing. So it is a fancy word for basically outsourcing things that you would previously have done on computers that were in your offices. So cloud computing, without trying to get too technical, there's different types of ways of outsourcing that. So you can outsource effectively just your infrastructure. So you could say, I don't want all of these computers to effectively be on my premises and be responsible for them, so I'm going to outsource the infrastructure to a third-party provider. So they will maintain all your computers and servers for you, but you will still own all of the software that sits on that stuff, or on the computers. Then there is what people sometimes call portal outsourcing. So you might do one further where you outsource both all of the hardware and some of the software. So just the portal, but you will still own and develop all of the applications that go on that portal. And then finally, what I think we're going to talk about today, which is software as a service, or what people refer to as SaaS. And that is when you effectively are outsourcing pretty much everything to a third party. So instead of running, I don't want to give anyone free advertising, so my ERP system, whatever that may be, running my ERP system on an in-house system, effectively all of that sits, what I'll say, up in the cloud. So I'll go on the internet and then I'll log in remotely to all of the applications that I am going to use to effectively run my finance function, but I do not own the infrastructure. I don't even know where the infrastructure is. And similarly, I don't own the programs. I didn't buy the programs. A third-party vendor has set those programs up for me, and they may be generic or they may have been customized specifically for my business.
Okay, so that's what is cloud computing. Now, obviously, this is an IFRS podcast, so we can't just talk about, some people might love that bit, but what are the accounting challenges?
Yeah, so the nice thing is that accounting challenges generally derive from business decisions, and that's, I think, why we're probably talking about this, because companies have realized that, do what you do well, and if you're not an IT company, maybe you should get someone else to kind of run your IT function and apps for you. And so the accounting implication of that is, if you think in the past, people used to buy the computers and they'd buy the software, they'd buy a license. So it was pretty easy. Credit cash, debit PPE, or debit intangible asset. And I think why the accounting has gotten quite interesting. There you go. So now all of a sudden everyone's like, I understand what he's saying now. Okay, yes. But now we have a problem because, on day one, you do not buy the equipment and you might not make a giant upfront payment. You might agree to pay the vendor over time for the right to effectively access these apps online. And I think where that gives us questions from an accounting perspective is, well, I don't have the credit to cash anymore potentially on day one. And if I look at my business, what it looked like before, I used to have all these hard assets and capex on my balance sheet, which people understood. And what has happened to that now? Economically, I'm still doing the same thing. When the cash goes out the door, it's still the same. It's paying for the same effectively good or service. But I think people are having a challenge or a question now around saying, has this become an operating expense now because I'm effectively just paying for a service? And from
as a service, I see it.
It's almost in the name. Exactly. It's almost like we were trying to explain what we were doing. So that's the marketing people getting involved. But that, I think, is the key challenge, or that's the business issue that folks are having, and that before they used to represent that this was capex and it's part of maintaining or growing your business. When people see this stuff as OPEX, they're saying, well, that's not growing or maintaining your business. So if I look at your business when you used to buy your own stuff versus when you're now actually paying someone else to run it for you, are people saying you aren't investing as much in your business as you did before? So obviously people get quite emotional about that.
Yeah, and so what are some of the guiding principles to help us decide the accounting?
Yeah, so I guess then the first question in terms of guiding principles, or where folks started, was to say, well, I'm not economically, or I don't feel like I'm economically doing anything very different. Doesn't that mean that I can still effectively say that I debit an asset and credit now a liability for the payments that I'm going to make in the future, when I pay this person over a 5-year period
Yeah.
who's going to basically manage my IT systems. And I think that's where kind of the rubber has hit the road in terms of us accounting folks saying, wait a minute, this doesn't feel like, or it may not feel like you actually have an asset. And in which case you need to actually just recognize this as an expense as it comes through. So credit, cash, debit, expense, don't bring an asset on day one. And so I think in terms of the guiding principles, it's a question of, is there an asset that I actually control on day one? And I think where this debate has started with some people saying this feels a little bit like a lease potentially, because it feels like I'm making a payments for a right of use over an intangible being the service that I might be getting. Now, I think everyone has broadly kind of agreed that it's not a lease.
I'm going to say that's crazy. Crazy accounting.
Has agreed that's crazy accounting. Yeah, no. So I think everyone's kind of got on board that it's not a lease. I won't bore you with some of the reasons, but I mean, I think that the more difficult question that folks are struggling with now is they're saying, but we do believe that IAS 38 is the right standard to be using, so our awesome standard on intangible assets. To say, should one say that on day one when you sign this contract you actually control an intangible asset, in which case you would still get to an answer that's very similar to if you would actually buy the computer equipment and the software on day one. So that's the guiding principles are apply IAS 38 and do I believe that I have control over an identifiable asset which meets the recognition criteria.
Okay, and then if you don't meet the control and the intangible asset, then you're probably in a service model.
Spot on.
Okay.
There you go. Look at you. Accounts 101, you know.
Yes. Who would have thought it? So it got so exciting that in September 2018, the IFRIC discussed it. Someone wrote in about this specific issue. So could you give anyone that hasn't read the paper, I'm sure everyone has, but just in case.
Yeah, I read the paper, listened to the podcast, which I did in anticipation of this. So, it was actually a very interesting discussion. And I think the bottom line is the IFRIC didn't actually get to a conclusion at the September meeting. They discussed a lot of good stuff, but I don't think they were at a point where they were ready to issue an agenda decision or a draft agenda decision. But I think some of the things that they were grappling with was to say, listen, when you've got almost two sides of the spectrum, you've got something where clearly it's generic applications, you're making a payment, that feels no different from a service. I'm paying over time for a service. I think where folks are saying on the other end of the spectrum, you basically pay someone or you have a contract that gives you a right to at any point in time download the software. It's customized for you. You can protect yourself by not allowing the vendor to use that software in anyone else's kind of systems. And they almost said, what are the key aspects you need to think about on where you might be on that spectrum? Because on the one side you'd say, well, you clearly don't control anything. This feels just like a service. Yeah. And the other, they were saying, well, if you look at the definition of control being, the ability to direct the asset and restrict others' uses of that asset, there may come a time where you've put enough rings and bells and whistles over this service that you do actually control an intangible asset. Yeah. Some of the key aspects that they spoke about that folks might want to think about as they're going along on this is, can you download a copy of the applications at will? Some people, and I think this is fair to say that the committee wasn't unanimous on that, but I think some committee members felt that was quite important, whether you could actually take control or ownership of the underlying software, because I think that was persuasive for many of them to say, well, then you do control an asset. It may not be the source code, but that version that you download, you can restrict other access and you can control that. So I think that was important for some folks. I think others did feel that, and I think what was important, where I guess personally I was maybe educated as well, listening to what the IFRIC members were saying, just making a large upfront payment for customization does not automatically mean that you have control of an asset. Yeah. Exactly. And I think that personally I thought that was quite useful. I think they said that's an indication. The more you might pay up front, and the more you've invested into this, and I think the staff was saying they were thinking of it more like an IFRS 10 control assessment. The more variability or cash you've put up there, surely that would mean you've given yourself, or you'd want more rights, protective and controlling, and that might indicate that there is an intangible that you control. But the mere fact that you've actually just made a huge upfront payment because you'd like them to customize the service you're going to get in the future doesn't automatically mean that you control something. So I think for me that was eye-opening, and something that I think our clients should think about, because I think to date folks have been thinking, I've made a giant payment on day one, so surely I can capitalize at least that piece of it.
Okay, perfect. So that's all in the IFRIC paper. Like you said, there's not a tentative agenda decision yet, so that will hopefully, by the time this podcast's out, there's still not. We're very delayed. But yes, so we'll watch this space in terms of what's going on at the IFRIC. Any sort of other aspects that you want to get across to people in our last few minutes?
I think maybe a couple. One would be, to the extent that you are engaging in kind of cloud computing arrangements from a business perspective, I'd say make sure you chat to folks before you decide that you're going to capitalize something, because that does seem to be that would be the exception rather than the norm.
Yeah.
If you are making a prepayment though for services, I'd say that is still just like a prepayment. You can capitalize that. So just before everyone starts saying the accountants have completely lost it. Yeah. So if you make a prepayment, exactly, accruals is still there. So if you make a prepayment for a service, you can still capitalize that. I would say if you're doing customization and it is material, that's the ones where you probably want to consult with someone and at least put that in as a judgment, and be aware that whatever you do may be subject to change after the IFRIC come out with whatever decision they do. And so just be careful if you're going to do that. And the last thing I would say is, if you've decided that for whatever reason you do actually have control of an intangible, but you're going to make future payments, and that was also in the paper, but I'm not sure it got as much airtime because they were still discussing whether or not it was actually intangible. But I think just in the measurement, that can also get pretty tricky if you've decided that it's not just any upfront payment that you've made that's going to get capitalized, but it's the continual payments as well, are just payments for this right or intangible that you already control on day one. Because as we know, that's a current other grey area where there's a giant, the unknown of variable payments linked to the acquisition of an intangible asset. So
that went on for years.
A lot of and still ongoing. One day we will get an answer. Too broad. That'll be covered by the FAST project maybe that deals with everything. But no, so that's maybe just some other things for folks to think about. And as you say, watch this space, because I think we will have an answer within the next kind of 6 months.
Yeah. Brilliant.
Of when we recorded this podcast.
Yes, actually. Everyone will know it's not live. Well, I've given away all the trade secrets.
Yeah, this is 2014, yeah.
It was 1 years ago. Well, Gary, thank you so much for joining me. Always a pleasure to have you. Come back again soon. Thank you for tuning in, everyone. I'm your host, Ruth Preedy. Happy accounting. The preceding programme was brought to you by PricewaterhouseCoopers LLP. This content is for general information purposes and is not a substitute for consultation with professional advisors.